Hey traders, checking into the stock market today. CPI big print at 9.1%. The market had some volatility, but in the end, not a whole lot changed today. We got financial sector earnings tomorrow. Let's see where we stand. So heading into CPI, we knew we were in a scenario where even if we had a bearish reaction, it's still possible to hold daily support and remain within a tightening range. That happened, and here we are. I also speculated and guessed at the potential that the financial sector earnings reaction starting tomorrow and Friday as well will be more impactful. That remains to be seen. But for now, we got a tightening range. So we had an initial bearish reaction. This is now 3 days in a row, and I've been pointing it out in the previous videos, where we dump in the morning, 5-minute waterfall drop for 20 to 30 minutes. That marks the low of the day. Well, not the low of the day. That marks the low of the morning for hours. We then bounce for hours. We set an hourly low or high. The previous 2 days, we then closed weak. Today, we pulled back a little bit, not that weak, but it's the same setup. It's the same thing. The drop was pre-market on CPI this time around, but drop, bottom set, bounce for hours, low or high. There you have it. So that has been the roadmap. And I was aware of that and definitely factoring that in as a possibility. As soon as the bulls changed the 5-minute trend in their favor, they had some breathing room. And again, look at the futures chart and this key daily support. Triple bottom, and we bounced just above that level on that reaction. And so when we confirm that 5-minute trend change, that increased probabilities that support was going to hold. When we changed the 15-minute trend to the bulls, increased probability that that support was going to hold. Now we have to see the high of today break tomorrow if we're going to say a daily higher low has been set. So for SPY on the daily chart, I would need to see a break of 381.92 for us to say daily higher low is set, and then shift our focus back to 390.64, our daily lower high resistance. So with where we stand, we can pretty much say we need a bullish reaction in the financial sector if we're going to have a confident daily higher low set tomorrow. So I didn't do a whole lot today. I did some trading where I headed into the morning flat for CPI. On the dump, I exited my shorts, scaled back into them fairly quickly, just a quick little flip, then patiently waited for the hourly lower high, took some shorts, did some flipping, never really got much of an hourly pullback, and I just ended up with a half-day maker. So very uneventful day. And if you look at the charts, today doesn't stand out in any way. A little uptick in volume, but it's not very eventful. The tightening daily range is superseding the CPI reaction as far as I'm concerned, and the volatility will come when this tightening range breaks. So bulls have to confirm the hourly trend change. We got our high of pre-market, the low of the reaction, lower high, and now we're scouting an hourly higher low. Anything above 373.18, tightening range is forming. NASDAQ, same deal. We didn't come as close to daily support as the NASDAQ has been a bit stronger than the S&P 500 recently. But it's the same thing. We need the hourly trend change. We got the clear equilibrium. As soon as that bounce on the hourly goes 50% plus retracement, the equilibrium then becomes the most likely scenario. So we're going to scout a higher low compared to the reaction low. And then financial sector earnings starting tomorrow pre-market. It's only a handful of names, but the whole sector is going to react. And so that, in my opinion, is going to have a significant implication as to whether or not the daily higher lows are set or not. So QQQ gap down. Bulls are trying to hold that daily higher low, but proving to be done. SMH, bulls bought the dip. We had a scenario today where it was QQQ leading the bounce, and because of that, we had growth and semiconductors all stronger. Those names are a group. QQQ, semiconductors, and growth often, certainly recently, are trading in unison with each other. Sometimes some are stronger and weaker, but they're in a group, and I have XLF and XLV in a little group as well, as far as how I separate the names that correlate more with each other. And it was XLF and XLV at the low of the day, a good part of the morning, QQQ trying to be the captain of Team Bull, trying to get the bounce going, and then eventually our weaker sectors joined Team Bull. And if we look at the financial sector on the 5-minute time frame, it was all bear to start the morning, clearly leading the way down, and then the V shape to the new high of the day. And what I was watching all morning, does our team bull captain, QQQ, roll over and join the bears, and we break the low of the reaction, or do our weaker names bounce and join team bulls to get bounce follow through? And in the end, it was the weaker names bouncing, again, both XLV and XLF dropping for the first almost hour of trading, and then the bulls got bounce follow through. So that's how I was observing the morning action. But again, a fairly uneventful day as far as my trading is concerned personally. So SMH needs an hourly trend change back to the bulls. Got a lot of resistance up at 207, 206.86, 207, 206.75. And the daily would have to break 209.90 to confirm an uptrend. Tesla, bulls bought the dip significantly. It was a lead bull on the bounce. Hourly trend change back to the bulls needed. If we get that, our daily high or low is set at 675, and we're then looking back up at the bounce high. Amazon, daily high or low trying to form. Equilibrium continues. Google, daily high. Ooh, weak close. Glad I looked in on that. Google absolutely standing out weak the second half of the day here. No daily high or low shaping up. Microsoft weakness certainly stood out yesterday. Tech sector is running out of bull captains. Apple is definitely the captain of Team Bull in the tech sector. But we're going to have to see somebody join. We're going to have to see Amazon break this tightening range bullish for the bulls to prove anything. Healthcare, anything above 126.17 is a daily high or low, but the pullback is now big enough that we will have to be cautious of a daily head and shoulders if the next time we bounce, we form a daily lower high, anything under 132.04. So bears still in control of the hourly. If the bulls gain the hourly, cautious of a daily lower high to be the result of the next bounce. Financial sector held support just barely by 10 cents into the bounce. So again, if it's a bearish reaction to earnings, we're going to test our support levels and our fear lows, and it's going to drag the S&P 500 down to its support. If it's a bullish reaction, we could go up multiple percent and still be under daily resistance of 32.34. So essentially, bears are comfortable because the daily lower highs keep printing, and essentially worst case for a bear tomorrow is a bullish reaction in the financial sector and a daily bounce being underway and supports holding. Worst case for bulls, bearish reaction to XLF, financial sector earnings, and we drop down and break support. So we're not on the verge of breaking resistance, we're on the verge of breaking support, and it's the bulls that need the help from the earnings reaction to hold those supports. IWM, trying for the daily high or low. Again, everything's tightening up. We know volatility is coming. And end of July is definitely going to see a volatility spike, without a doubt. Probably next week. Biotech sector, all bulls still. We saw it the second half of yesterday with the dip buying. We saw it all morning. Again, look at the morning. Look at the first 20 minutes of trading. And we look at what SPY was doing. I mean, it's a night and day difference. It's just such a clear bullish correlation. Growth names stood out all morning. Look at the first 20 minutes for ARK. Increasing bull volume on that move. Biotech sector, PLTR. So growth had this move. NIO was benefiting. Growth stood out strong and then faded. You know, they used up all their momentum on the morning. But the biotech sector, daily high or low is officially set. New benchmark level, 78.09, to ensure bulls keep complete control. And we're looking at the high of the bounce, 84.63. There are other growth names that don't look as strong on the daily. So if PLTR here, it is still a daily high or low pattern as long as 872 holds, but have to be cautious of rolling over if bulls are running out of their momentum. CRWD, same thing. Have to be cautious of a daily lower high being the result of any bounce from here. But XBI does not have that setup. It's clearly stronger. Dollar started a pullback today. We haven't confirmed a downtrend. We've broken hourly supports, no hourly confirmed downtrend. Today, the drop, no hourly confirmed downtrend. When was the last time we set an hourly lower high and lower low? It hasn't happened since July 8th, when our last brief period of consolidation was. So the daily consolidation at this point is potentially a bull flag. It's still very healthy. We have to see bears confirm follow through. Big drops, fast drops, they're nice, but you got to follow through. So I'd be scouting an hourly lower high to be the result of this bounce, and then an hourly higher low, potentially, depending on the retracement size, which is just getting towards 50%. With that, the metals are trying to bounce, but again, we're just looking for daily lower highs. We can bounce a bunch of percent and still be looking for those daily lower highs. Silver as well, same deal. Bounce is underway, but it's still a very weak daily bounce. Miners had a nice double bottom and bounce today. Support was set at 2604. We held it by, or we broke it by 1 penny, so a double bottom. But we have to confirm an hourly trend change to have any follow through. Oil is grinding my support line. Need a 4-hour trend change back to the bulls. Well, we got one. Higher low and higher high. Definitely need more follow through to have any confidence in a daily bounce. But certainly going to be keeping an eye. And if I want a more relevant resistance line, I can tighten this up and hit the more recent price action. And this is how I would draw the resistance line. It is a potential falling wedge if we're green tomorrow. Why? Because that would be a bear break with zero follow through straight into a bounce, which means scout a wedge. Energy sector, daily higher low set, but have to break 72.14 to confirm an uptrend. Natural gas, very impressive bounce. We have the 4-hour rising wedge break bear. Bears definitely need to take at least some profit from that. Look at this back test. Right at the apex where the resistance and support line meet. That is where we topped out with pretty much a double top at 674s and 676s. And so now we're going to scout a 4-hour higher low if this pullback continues. It's definitely impressive that we bounced all the way back to that level, but a nice confluence of signals with previous price action as well as previous trend line levels, as well as I'm sure overextended RSI. The hourly RSI went from 70 where we topped out to just above 30, or right, it hit 30 where we bottomed, and now 70 again. 15-minute RSI was showing a little bit of divergence there. So now the question is, can bears follow through it all into 4-hour consolidation? So overall CPI, not really eventful. Again, you show me all these charts and I wouldn't think anything fundamental noteworthy happened today. So now we move on. CPI, okay, great. Yes, it's still climbing. Yes, we'll look towards it next time we get these numbers coming out. It is a little bit of backward looking. These were the numbers for June. Now we're multiple weeks into July. But from here on out, it's earnings. Starting with the financial sector, then heading into the tech sector towards the end of July. Burden on bulls. Bears are comfortable as long as daily lower highs remain. Volatility and volume incoming when these tightening ranges break. Hope you had a good day. Do good things. And we'll see you soon. Baby turkeys are growing up.